Hello and welcome to another trades and tutorials video. In this video I am going to take a look at the historic move, and I call it historic, in the Qs of October, because if you look at the percentage gain in October, almost 11.4%, that has only happened twice, right here and right here, since 2002, which is right here. So in this video, I'm going to take a look at that. We're going to take a look at other indexes, and I'm going to take a look at how other sectors also performed in this month of October and see some of the patterns that might be helpful to determine what might happen next. Now, before I do that, however, if you're just stumbling on this on YouTube, please make sure to subscribe to our channel. And also you'll notice perhaps that I'm looking at a web page. This web page is actually a blog where I've posted all these charts that you're going to see. So if you want to see that, make sure you go to marketgauge.com/tutorials. And finally, to see this video in HD, use the settings in the lower right hand corner. It'll make the resolution much clearer. I think you'll like it much better. All right, so back to where I began. October was an incredible month for the Qs, and it's gotten a lot of press as being the strongest month in 4 years. And the reference to that is because back in 2010, right here, that's how far back you have to go to get the same percent gain. So let me take a step back. This histogram that you're looking at down here represents the monthly percent change of the chart that we're looking at. So in this case, we're looking at a monthly chart on the Qs, and green means it was an up month, and this is the percentage it was up, and red means it was a down month, and this is how much it was down. So we're going to look at this for the Qs and for the SPYs and the IWMs and about 12 sectors to look for certain patterns. Now, the one thing I want to point out in terms of patterns as we look through it, first of all, 11.4% is obviously a huge move for the Qs. In fact, just eyeballing it, if this is about 4%, you can see that is a huge move for the Qs, just 4%. As we look down at other sectors, you'll see that 4% is almost easily achievable by a sector, and that's one of the reasons that sector rotation models like the one that we have can dramatically outperform the markets, as long as you know which sector to be in. And on this page, I will have a link in the text if you want to learn more about sector rotation models, but that's not what this video is all about necessarily. What we want to see is the rally in the Qs something that was broad, participated in a number of sectors, and which sectors were they, and was it as a historic move in those sectors? Now, before we leave the Qs, one thing I find interesting here is if you look at the other times in which we had large moves, these two here didn't quite match, but one did, came at a low. All right. The other thing that you'll notice is a lot of times when you get large moves, they come after periods of down moves. That was the case here. Now, even here, where the move was a big move, in fact, this is the one of the two that showed up, it happened after a month that was down. It also happened near a high. So just because these big moves happen near a high doesn't necessarily mean, one, that the next month has to be down, and two, that it is a high. Obviously, this one went on to go much higher. And if we look at another one that was close, it too came after a couple months that were negative. They weren't dramatically negative, but they were pretty negative for the Qs. It was up near the highs, and it was, if anything, an indication that the market was back and strong and a breakout should be followed, and in fact that was the case. So here too, in 2002, now this is the bottom. This is literally the bottom of the internet bubble burst. Okay, those two big months right there. All right, so when you get these outsized moves, they are definitely worth paying attention to. They don't have to come at lows. They can come at highs and still be productive. And my 2 cents on this is that is probably what we're going to see here. We had a couple of ugly months, and they were really ugly, actually, if you looked at the lows. And now we've made up for it in, well, let's say, typical fashion, right? These are the pretty significant corrections, or the most significant corrections that we've had since the lows, and they all kind of began or fixed themselves with this big upsurge. So let's just take a look at the other indexes to see if they had a similar pattern. So SPYs also had a really impressive, it wasn't as big numerically, 8.5, but you can see 8.5 on the SPYs on the S&P 500. It happened once in 11. It doesn't look like it quite got there in 10. Maybe it did. And then you had to go back to 09 to find a move like that. So this too falls right in line with what we were talking about with the Qs. If we look at the IWM, IWM wasn't as outsized for IWMs, okay, 5.62. We've seen that quite a few times in the last couple of years. So for the IWMs, the equivalent would have been a 15% move, all right? So it was an average good month for the IWMs. But here again, if you look at the pattern, these bigger months often come after down months. All right, so I guess one pattern that you can see here is that when the market pulls back, it's not necessarily a bad thing. It's often an opportunity. So now if we go into the individual sectors, and I won't go through them all in great detail. We'll be here for a while. I've got about 14, and these are all the sectors that we follow on the Little Big View sector summary. So if you go to marketgauge.com/sectors, it'll take you right to a page that won't have these charts, but it will have a daily update of 3-month, 6-month, and 12-month performance of these same sectors. So what we want to look for here is a couple things. How many of the sectors had a really strong month like the market? Was it a lopsided rally where there's only a couple sectors that drove it, or was it pretty broad? And to give away the ending, it was pretty broad. Not only that, we'll find that the ones that rallied were not defensive. They were constructive for a bull market move to continue. For example, XLY, consumer discretionary. If the market's going to move higher, it would be great to see consumer discretionary in the lead. That would be a great leading group. And so this one, 9% move, outsized move. And as you can see here, again, as we know, followed previously down months. So that's good. That's what we want to see. All right, XLPs. All right, XLPs, now these have had this size move before. It's a big move, but it wasn't necessarily outsized. But at 5% is a decent, solid move for the XL. And XLPs, by the way, are consumer staples. So we do want to see the consumer in every aspect participating in a bull market. Now, XHB, so the home builders. Home builders, if I had to characterize this, up 4.4%. It's a decent move, but it's just that. It's a decent move. It's not a great move. So home builders, I guess, remains to be seen whether or not that's going to jump out as one of the leaders. XLK, technology. All right, now this one you would expect to be big. Since the Qs, the leader of the broader index, is very much heavily weighted on technology, although not completely technology like it used to be. 10.5% coming from technology, and that's a move, again, we haven't seen since 2011, which was close but not quite the same, and 10, and then back to 09. And again, the last time this happened in 11 happened near a high. In 10 happened near a high or a high after a long run. Didn't mean the run was over. IYR, okay, real estate. Now, real estate, I would say, had a pretty good size move relative to what it usually does. The scaling here is a little off, or I should say, is a little hard on the eye because we've got 2 months on the both up and downside where we look like we exceeded 25%. So that makes these all look small. But a 6.2% move in a month is a big month. Doesn't happen very often. And again, I would say I'm not so sure IYR as a real estate is a leader, but it's a decent move. Now, XLF, you want to see the financials lead if the market is going to move higher, and certainly you want to see the XLFs and financials leading if there's any concern over raising or rising interest rates. Right, this is a group that should do well or better than others in that environment. So I see this as encouraging. All right. Again, this is not necessarily a monster. We saw another one early, similar to this in 2015. We got pretty close in 2013 a couple times, and several times in 2012. So a monster move in this one would have been much more in line with, say, over 10%. But 6% still good. And again, remember, part of the exercise here is whether or not a whole bunch of groups participated in a big way. I'd count XLF as a good participant in October. Likewise, XLV, this is healthcare, definitely a good participant in October, puts in a record month. And let's move on to XLU. So XLU is a defensive, all right, utilities. That's often a defensive sector. So this is one that we don't really care, or perhaps don't even want to see having a strong month in a month where you want the market to continue higher. Now, XLU has kind of been viewed as more than just defensive in the recent years, but that has a lot to do with QE and the interest rate environment. The fact is that this only put in a 1% move, which is really small for XLU, I see as a more bullish as opposed to bearish situation, because money is moving out of what could be defensive and into other areas you'd like to see as market leaders. XLI, the industrials. Industrials could probably go either way in terms of how important they are to a market leader, but certainly can't hurt to have them be one of the participants in a strong month, and certainly they held up their end of the deal there with an 8.78. That, as you can see, was an extraordinary month. Now, semis we'd like to see be a leader because it's a rather large part of the technology group. Semis actually have been this strong several times in 2015, which is interesting in such a weak or flat year, because they've been this strong, and yet prior to that you really had to go back to 2012 to get such a strong year. So semis are particularly interesting, I think, at 8.68. It's not a blockbuster month, but it's another solid performer from the semis. IYT, transportation, we'd like to see this be strong too if the bull market is going to continue. This, however, I would say we just put in an average good month, right? So it's reached this level several times in the last couple of years, but it's still a formidable level to reach, and supports one of the objectives of the video here, which is how many of the groups had a good month. I'll chalk IYT up as to having a good month. XRT, look, I'm trying to be nice to these groups, but this guy just did not cut it. 3.3%. I don't know what's the matter with retail, but it is definitely has not picked up. This is not a great sign. And as you can see, it's had a lot better months than 3.3. I guess we could say at least it was positive. But this is one to definitely keep your eye on and look for improvement here, because it is definitely a laggard. XLB, materials. Blockbuster month. This one, like the other blockbusters, 13.4%. Now, granted, this thing has had a real rough patch over the last 4 months leading up to this. So this had a lot of making up to do. But materials, it's good to see. I don't think it's required for a bull market, but good to see. Now, energy. We all know what's happened with energy. XLE, absolutely been hammered in 2015. So while this did have a great month, and at 11%. And it's a great month looking back historically. The only other time has been 2011 and 2009. We've heard that story a couple times going through these charts. After being so hammered for, 6 months, 5 months, I almost think we could have gotten a better rally out of it. But that said, on a monthly chart, I didn't look at this on all the other ones. XLE, the interesting thing about XLE is that this is the biggest up move we've seen since 2012, and it closes over the prior month's high, which if you watch any of our other instructional videos, that is a significant event. So if XLE continues higher, up over this, this must be the 70 level, this could look like an interesting bottom pattern right here. All right, so I know I dumped a lot on you, but I think this is an interesting perspective. As I said, if you want to see all these charts, draw your own conclusions, you'll find them at marketgauge.com/tutorials. And if you're looking at this in the future, the title you're going to look for is Only Two Other Times Since 2002. And hope that helps. I'll see you in the next video.